I always like to focus on what's moving the most. So what we can see very clearly here, and I'm going to flip over to a daily chart. Remember what we had here. We had very clearly a consolidation going on between the 38,000 level right here, right? Okay. And the bottom level here. Now, again, if you've been following these game plans, and I know, listen, a lot of people out there may not follow as closely as they should. That's their problem. But if you've been following, we've talked about how when you have a flat top with an upsloping channel trend line, price tends to eventually break out. That's just the probabilities. That's what the data shows. All right. What ends up happening here very clearly? We broke to the upside, and now we're trading at 41,700 and change. So the kicker is, okay, well, where are we going? Well, the first stop, and I talked about this in this game plan as well, I said 42 to 43,000. That was going to be your next stopping point. Now, if we zoom out on this, we can take a look at why that's the case. All right, so again, it might be a little bit hard to see in this situation, but there are some key pivot points right around that level. So there's some points right in here that give us that 42 to 43,000 level. Now, the high of the day so far on Bitcoin is 42,163. I will go on record and say I did post, or I did take another small short right up above 42,000 today. This is the method that I use. And listen, it's not to say that I'm not a long-term believer in Bitcoin. But again, if you look at the Bitcoin chart, you've literally seen no major pullback since we were at 26,000. Now, again, the beauty of what I do, and again, let's talk about percentages. My first little short, 2.5% of my portfolio. My second short, which I just took today, 2.5% of my portfolio, for a total of 5%. Now, a lot of you guys will say, like, oh man, that's nothing. That's the point. The point is, when you're trying to find where these things top out, you have to be very aware that they can go up. And I have a max move on this that says there is a chance we could go as high as $48,000. Now, I'm going to show you why. So the potential max upside move would be around 48,000. The reason that's the case here, guys, is because you have a pivot high right here. Let me bring that up now. So right here, and we draw a line straight across. We then take some pivot points to the down or from the lower levels here as I zoom out a bit, and we go all the way back to the highs of 2019. Right there, through the lows of the bull market right there, and they converge right up here at 48,000. Now, as if that's not enough, check this out. What if we do a Fibonacci retrace from the bull market high to the bear market low? Let's do that right now. If we take that Fibonacci retrace, what do we get? We get a beautiful Fibonacci, and there it is on the chart. I'm going to zoom in a little bit so we can see it a little bit more closely. But take a look at this right here, the 618, which is a major Fibonacci number. That line literally aligns with 48,000 to a T. Now, one of my concerns here is that everyone I'm seeing, so initially this was my target. I talked about it 6 weeks ago, 2 months ago, as the potential max move upside on this chart.
Hey, crypto legends, get ready for an interstellar journey because Bitcoin is breaking through barriers, soaring past $41,000. And you're tuned into Crypto Street, where we decode the crypto universe. Buckle up because today's ride is fueled by institutional fireworks, Space Force endorsements, and a sprinkle of Bitcoin magic. Let's dive in. Bitcoin, the crypto heavyweight, just hit a milestone, shattering the Terra Luna USD capitulation level after an 18-month cosmic dance. Over the weekend, Bitcoin experienced a jaw-dropping breakout, surging over 5% in 24 hours, dancing its way to a dazzling $41,400 during the early London session on Monday. And guess what? Derivatives leverage trading witnessed a mind-blowing $72 million in liquidations. Short traders, you might need a breather. Hold onto your moon helmets because here are the warp speed reasons behind Bitcoin's rally. Institutional adoption. Bitcoin is now the cool kid in the U.S. financial system. MicroStrategy dropped jaws by snagging $593 million worth of Bitcoins, funded by selling shares. And guess who joined the party? None other than the heavyweight fund manager BlackRock. Institutional interest are looking sharp. Space Force endorsement. United States Space Force Major Jason Lowery is throwing Bitcoin into the cosmic battlefield. He's urging the Defense Department to adopt Bitcoin as a cutting-edge tool in cyber warfare. Bitcoin, the superhero in the defense squad. Who saw that coming? Spot ETH FOMO, the U.S. is gearing up for a Bitcoin ETH party. Analysts are betting on the SEC approving spot BTC ETFs by January 10, 2024. Cue the FOMO trading frenzy. Everyone wants a ticket to the ETF spaceship. Hold the asteroid phone. Bitcoin is eyeing a psychological resistance level of $42,000. Analysts have circled it as a key target. Meanwhile, Ethereum and the altcoin gang, led by ETH, are rocking a bullish breakout. But crypto voyagers, there might be a twist. Bitcoin's price might do a moonwalk back to the support range between $31,000 and $34,000, either before or after the upcoming halving event. Strap in for the roller coaster. Breaking news from the space frontier. Cathie Wood drops a bombshell. A letter from United States Space Force Major Jason Lowery. He's proposing a Bitcoin-powered defense strategy. In a 4-page letter to the Defense Innovation Board, Lowery pitches Bitcoin as the ultimate cyber warfare game-changer. Forget conventional defenses. We're talking about turning the world's electrical grid into a colossal Bitcoin-powered shield. It's not just crypto, folks. It's a cybersecurity revolution in the making. And there you have it, crypto street investors. Bitcoin's breathtaking surge, institutional fireworks, and a cosmic defense proposal. Now let's continue our enlightening discussion with Gareth Soloway.
Take a look at gold here, guys. So we know gold was on the verge of a breakout. We had a high pivot here from 2020, high pivot 2022, 2023. Yesterday, when gold opened, it had this God candle, as the new term is, where it just shot ridiculously higher, getting basically above $2,150. Now, what ended up happening here? So basically, what happens is, and when you get these big pops, what's essentially going on is that there are a lot of short stops on gold. Now, I've always been saying, guys, gold is awesome. Gold is going to be a top performer. But what happens is when you go through that all-time high, there's a certain amount of stops for shorts that are triggered. Now, this pop in gold occurred basically last night when the S&P futures opened, when the gold futures opened. In other words, the volume was almost non-existent, right? So when there's no volume and you have a bunch of shorts that are triggered, it's going to cause a massive oversized move. That is not a normal move for gold, guys. Now, the kicker is this, is that number one, we had an inverse head and shoulders here that I've talked about quite a bit. We were above it, but to trigger the inverse head and shoulders, you must, and I repeat must, get a daily close above the neckline. What's the neckline here, folks? This white line. Well, right now, we are not above the white trend line. Therefore, you have not triggered the head and shoulders just yet. We have to watch and see where this ends today. If it ends below, there's no trigger. Not only that, but one of the very things we have to be aware of, and I'm just a technician here, I am someone who dissects the data, but if we end where we currently are, what candle formation is this, guys? What candle formation is this on the chart? And this would be a topping tail. And a topping tail is a reversal signal. Now, by the way, does this mean that, oh, gold is going to collapse back down and no longer break out? No, it doesn't mean that. What it means is you actually could be setting up for at least some sort of pullback off of this level. Like, for instance, we know we've had a pretty remarkable bull run on gold, right? I mean, all the way up there. So to be honest, if it were to pull back here around 2,000, that would be very normal. There's also upsloping trend lines that can be connected right in that vicinity. So I would not be surprised if gold has a pullback to about the $2,000 level at this stage over the next, let's say, week or two. That could also coincide with the dollar gaining strength, maybe yields starting to bounce up. Now, in regards to yields, let's talk a little bit about Friday. The markets had a good rally, But Jerome Powell was actually pretty hawkish. I think the rally on Friday, and this is very common, if you look at the data, again, everything's about data, you have to understand that the data dictates that you see the first of the month, which was on Friday, new money flow coming into the markets. And so even with the hawkish kind of statements from Jerome Powell, the market basically pushed those aside and rallied up as new money flow came into the market. Now, interestingly enough, and we'll talk a little bit about this when we go to the S&P chart, we are seeing a pullback today. Now, remember what I said on Friday, and we're going to go to the S&P in just a minute, is that yesterday, or I should say Friday, the bulls maintained control. All right, remember, we had that reversal candle a couple days prior. We didn't get follow through, and the markets then ultimately pushed up. The bulls are still in control. But when we're extended like this with key stocks starting to roll over, I'm continually watching for where the bears begin to gravitate and take control again. And I'm watching like a hawk for this.
That wraps up today's crypto news highlights. Stay tuned for more updates, insights, and analysis from the world of cryptocurrencies. Please share your thoughts in the comments below. Don't forget to like this video and subscribe to our channel for more engaging content.